Hello and welcome to Analyzing Finance with Nick. In this video, I am going to do a follow-up on my most controversial video that I've ever done on this channel, which was the video I did debunking food shortages across the United States. To be clear, I was not referring to struggling food importing countries that relied heavily on wheat and corn exports from Russia and Ukraine, but more to the United States and other developed markets who are net exporters of food. I got a lot of criticism. People were claiming that there would be empty grocery shelves by summer 2022 and that you would see mass starvation across the United States of America. And I was asked also frequently to do weekly, monthly updates on it. And now it's been about almost 3 months today, because I recorded that video on March 30th, 2022. I wanted to give a full update on what my thoughts are on the risk of a global food shortage and food prices as a whole. And if you like the content of these videos, please like, subscribe, and share it with people you know. Pardon me a little bit if the audio quality might be off, just because I am recording this away from my usual recording area. So I do not have all my equipment, but I wanted to get this out there on a timely manner. So let's start with really the true barometer of we can measure in the most quantitative way whether there really is a severe food crisis coming or not, or is it getting worse or better. And the way I think the most objective way to look at this is through what is going on in the commodity futures markets of the tradable food items that are out there. Let's start with wheat, which, as I'm showing this chart, brought to you by FinViz. And when it comes to wheat, the blue line is where wheat traded the day before the invasion of Ukraine by Russia. The black line, the vertical line, is where wheat traded when I first released the last video of this series on March 30th. And as you can see here, wheat is not only off by more than 20% since when I did this last video price. It's also lower than it was before the invasion of Ukraine. So if the Ukraine crisis is really causing severe food shortages that cannot be fixed and is going to cause the Americans to starve to death, why are wheat futures then trading lower than they were during the conflict? The reason why is because there's been bumper crops in places such as Australia and the US, which even has weather kind of slowed down the initial planting. Farmers caught up pretty quick, and it's looking like we're going to have a sizable crops elsewhere globally to make up for at least some of the losses. Does this mean I think that wheat's going to trade all the way that it did back to the levels before the pandemic? Probably not. There are plenty of reasons why inflation can keep going, and that's more to mismanaged fiscal and monetary policy in many countries around the world more than a global inevitable food shortage. But wheat's not the only food item out there. Next, let's talk about corn. Corn had a similar spike in price after the invasion of Ukraine. The blue line is where corn was trading approximately when the Ukraine invasion started, and the black line is where corn was trading when I recorded the first one of these debunk the food shortage videos back in the end of March. It's down more than 20% since March 30th, and it's down more than 10% since the February 24th, 2022 invasion. Ukraine is still more than 10% of the supply of corn, but planters in places such as the Midwest, the United States, and in Latin America have been able to pick up the slack. And planting, even though it did come off like wheat, came off to a slow start, but rapidly caught up as moisture came back to the Midwest. Looks like there's going to be enough crop to balance supply at even a faster pace than I thought would happen. Similar to wheat, do I think it's going to go back to where it was pre-pandemic? No. There's plenty of other issues that are keeping inflation structurally high. And there is a lag of how long it takes for supply to fully normalize after a geopolitical shock like we had this winter. However, a chart like this is telling me that an inevitable food shortage is not what the market anticipates. And food prices in both wheat and corn, which are two of the most important staple crops in the world, and also the source of feed for most meat animals, would not be trading this far down if that inevitable food shortage was such a worry. And speaking of meats, let's look at cattle. Cattle prices are also trading lower than when we did our last video on this. I think that, to be fair, the herd probably got slaughtered in anticipation of higher feed prices. And usually when you have such a rapid shock higher in grain prices, it results in usually a dip in meat prices because farmers kill their herds early to avoid the excess feed costs. And as a result, you usually get a dip in meat. And what's actually concerning to me, as somebody who has been skeptical of most of these food crisis fears, is how resilient meat prices have been. And particularly for meat and also for fish and chicken. There are potentially other reasons for that. You have heavy industry concentration in the meatpacking industry, but also higher protein prices is really just more of a product of inflation. When people have more cash, especially those from more emerging economies, the first thing they want to do is switch from an all grain and plant-based diet to eating meat on a daily basis, or at least more than just holidays, which was the case in many emerging world countries before fairly recently. And we have more money supply out there to spend on meat, and the same or less amount of meat, that would bring prices up. And that's why meat prices have significantly outperformed other commodities and have overall inflated the last decade faster than food inflation as a whole. So this is probably, even though this is, again, nothing aside of an inevitable food shortage, the resilience in meat prices is the one concerning variable that I'd like to share in this video. And then let's look at pork. You have a similar thing going on with lean hogs, except pork prices really haven't seen on a bigger macro scale as large of a rally as beef prices have, or chicken, or other forms of protein. It's pork lean hogs or futures are probably trading about the same level as they were just before the Ukraine invasion, and they are down about a little less than 10% from when I did my first video on this. However, they are lower than they were at this point last year. And this is probably the one meat that hasn't really seen a concerning level of inflation. And yeah, if there's plenty of these pigs out there for people to eat. And then the other commodities, the softs such as sugar, soybeans, cocoa, and coffee have also seen similar downtrends. And the DBA is an ETF, which is a basket of all the agricultural commodities, and it has traded well off where it was before the Ukraine invasion, which is the blue line, and is down by more than 10% from when I did my last video. And this is a proxy for agricultural commodities. There is natural decay in this contract, so unless if commodity prices go up faster than the roll yield, this thing will slowly decline. But the pace of the declines recently are far higher than what would be indicated from typical roll yield. So overall, it's not just grains and it's not just pork, but the ag complex as a whole is showing declining prices, which does not really indicate inevitable global food shortage. The last thing is more of a story that I read recently in the Wall Street Journal about how rice is saving Asia as the Ukraine war has driven up food prices. Rice has been fairly stable and has not really gone up with wheat and corn. In fact, it's trading lower than it was this time last year, which cannot be said for the other grains out there. And rice is more integral to diets in many Asian countries and African countries with much lower incomes than the developed world. And the abundance of the rice crop has really prevented food crises from that part of the world. And emerging Asia has had inflation rates half the rate of other emerging regions such as Latin America, and even has had a materially lower inflation rate than the United States. And so if we have rice abundant to keep inflation in Asia at under 5%, then is that really the case that of a food shortage globally? Overall, I will keep updating these once every 3 months until really these food shortage concerns become irrelevant or my viewers really no longer care about this topic. And there could be further inflation to come in food prices. The reason why you're starting the grocery store prices are going higher even though the future is going lower is because there's a lag between the futures prices and how that is ultimately impact grocery store prices as it goes through digests through the supply chain. There's also energy as a key component to food costs, and if oil price is higher, it's more expensive to ship and move around food from place to place, which is a large chunk of the bottom price in the grocery store, the bottom line price. And now we've seen oil come off a little bit too the last few weeks. You might finally start to see some relief in the grocery stores, I would say, by the end of the summer. However, I mean, you can easily see food and ag prices turn up once again, not necessarily because of shortages, but because of structural inflation due to bad fiscal and monetary policy, or if energy prices remain high due to the supply and imbalance dynamics in the oil market. So I will update viewers about around Labor Day weekend, like the end of August, early September, and see if there is any sort of change in what's going on in the food market. But so far, 3 months in, the food shortage fears seem to have been widely overblown. Thanks for watching, and good luck out there in the markets.